A super good morning to you. Terrific Tuesday today. Have a good one. Welcome to today's episode of Morning Well. We'll talk about three things. Rotation intensifies. Yellen says relief bill won't cause inflation. And dollar index climbs to its strongest level in 4 months. Technology stocks continued falling Monday, pulling the Nasdaq composite into correction territory as a sell-off in US government bonds extended into a sixth week and sapped demand for once high-flying shares. The Nasdaq dropped about 2.4%, extending the declines from its February 12th record to more than 10%. Rising bond yields dent the allure of growth stocks like those of big tech companies. Apple shares were down 4.2%, extending their declines for the year to about 12%. Netflix, Facebook also posted losses of more than 3%, while Tesla, another favorite, shed about 5.8%. Shares of Tesla have dropped more than 20% in 2021. Meanwhile, a rotation in the stock market continued. The Dow Jones was up 1% following a progress on the new fiscal stimulus bill that brightened economic prospects. The blue chip index, which is weighted more heavily towards cyclical sectors, surged as much as 652 points earlier in the session, setting a new intraday record before pulling back. The S&P 500 was down 0.5%, pulled lower by losses in tech, communication services and healthcare groups. The bond market, the yield on the 10-year treasury ticked up for the fourth consecutive session to 1.594, its highest since Feb 2020, and on Friday it had closed at about 1.55. President Biden's $1.9 trillion COVID-19 relief plan was approved in the Senate over the weekend and faces a vote in the House as early as Tuesday. The additional fiscal spending is expected to bolster the pace of economic recovery and boost inflation. As the outlook brightens, money managers are moving out of government bonds and technology stocks and into sectors such as banks and energy that are likely to rebound with the economy. Among other stocks, General Electric was up 4.2%. The Wall Street Journal reported that the industrial conglomerate was nearing a $30 billion deal to combine its aircraft leasing business with Yellen's AerCap. Investment firm Athene Holding gained about 6% after it said that it would combine in an all-stock deal with Apollo Global Management. In other markets, the Euro Stoxx 600 was up 2.1%, led by banking stocks. In Asia, most major benchmarks fell. The Shanghai Composite dropped 2.3% and Hong Kong's Hang Seng declined 1.9% as investors grapple with signs that Chinese policymakers will take more action to rein in debt and prevent asset bubbles from forming. This comment from Janet Yellen was interesting to note. Janet Yellen dismissed fears that the $1.9 trillion pandemic relief bill is so big that it will cause an inflation problem. She says, I really don't think that's going to happen. The Treasury Secretary said in an interview with NBC, inflation before the pandemic was too low rather than too high, she noted. Yellen said the plan would return the US to full employment next year. In other news that caught my attention was Tesla's getting into Texas power market. A unit registered as Gambit Energy Storage is building a more than 100 megawatt energy storage project about 40 miles south of Houston. Lastly, on the FX, investors have a voracious appetite for US dollars this month as the dollar index climbed to its strongest level in 4 months. Over the weekend, the Senate passed a $1.9 trillion stimulus bill, which is expected to pass the House tomorrow and signed by President Biden before the end of the week. The passage of this bill has been eagerly awaited and now it's pretty much a done deal. Investors are starting to think about how stimulus checks will be spent. The $600 stimulus check sent out at the very end of last year saved January retail sales. This time, qualified individuals and families will receive a one-time check of $1,400, more than double the last payment. The criteria narrowed, but according to the White House, approximately 98% of the people who received the prior payment will receive the new one. This is in addition to the extended unemployment benefits and larger child tax credits. All of the pent-up demand combined with expanding vaccine rollout and the CDC saying it's safe for vaccinated people to gather indoors, the economy could receive a even stronger boost from this round of stimulus. The US dollar soared in response. The 10-year yields also rose above 1.6% intraday, a level that is consistent with the dollar-yen above 109. The US dollar should hold onto its gains with consumer prices scheduled for release on Wednesday. Yields surged this year on consensus about rising price pressures. With oil and gas prices soaring in February, consumer price growth could beat the market's 0.3 forecast, and if it does, the US dollar could climb to new highs. That's the update. Stay safe and healthy, and I'll speak to you.